All right, everybody. Stocks by the numbers. Welcome back. Wanted to do a quick earnings little update here, a little prediction on a company that I'm sure all of you are familiar with. And when we spoke about it several months ago here, we were looking at it at around the $70 level, and they completely brought it all the way down to these new lows of around $50 here after this slight miss here, even though revenue was increasing. And I said excuse me, I said that in my opinion, this was an overreaction and I would be buying these dips, and chances are it would only be a matter of time before PayPal would rebound, get back up to that 70 plus level, and potentially even higher given some months and a little bit of time, right? So the name of the company we're looking at is PayPal Holdings Incorporated, ticker symbol PYPL, listed here on the NASDAQ. Stock right now, $63.85, up 13 cents, 0.2% here on the day. Excuse me. But basically what I'm looking at here is, in my opinion, I'm looking at a company that's undervalued, right? We have a market cap now down here, we'll call it about 69 billion. We have a PE sub 19. Now remember, this is a tech company, a finance payment company, and with this market just raging and continuing higher, you're telling me something like this is not only being kept down in the revenue to market cap comparison metric, but of course, more importantly, in the PE here, sitting again sub 19, right? So in my opinion, something like this, especially a brand name stock like PayPal that has consistently been beating estimates on the revenue side. Again, I mentioned the revenue, in my opinion, is the basic lifeline of the company. Look, even when they miss, it's only by a couple of million. And then before that, look, beat. What happened here? Miss on EPS, but a beat on the revenue, right? So 1, 2, 3, 4, 5, 6, 7, 8. The last 8 quarters, the company missed on revenue once by just a couple of $1 million, which, in my opinion, shows us that we have a slow, steady, stable grower. And that's why I'm saying a company in this sector, in this market, again, we could easily see a PE 25, 27, 30 times earnings. So that's why I feel I will again say that, in my opinion, I think PayPal is undervalued in the numbers in general, right? But that doesn't mean necessarily it's going to go up today after earnings. But in my opinion, estimates are up now at 7.88 billion. They're expecting $1.36, we'll round down, on the EPS side. And in my opinion, I actually think that the company does have a very, very high chance to beat on the revenue side here and post at least at or potentially above that number. But also, even if they come close, look at this. We come down here, we look at some of the numbers. First of all, look at this annual growth. Cannot be denied. 15.5 billion, 17.5 billion, almost 21.5 billion, 25.5 billion, and then as of 2022, a little over 27 billion. So the company is seeing phenomenal revenue growth year over year and doesn't really seem to be slowing anytime soon. So 27 billion for 22, right? This is going to be period ending December of 2023, coming in with 7.88 billion. So this is Q4 of 23, right? You can see we have Q1, 2, and 3 already reported. So if we just do a little bit of quick arithmetic here, you can see that 7 billion for the quarter in revenue, 7.25 billion. We add those up. Now we're at 14.25 billion. 7.4, we add those up. Now we're at 21.65 billion roughly. And now they're supposedly slated to post 7.88 billion. So that would bring us to what? Wait, what did I say? Oh my God. See what happens? 7, 14.25, 21.65. So 28, 29.45, 29.5 billion. Coming back here, 27 billion. So again, we're seeing another potential year of year-over-year growth here on the revenue side, of a jump of around 10% year over year now, going from 22 to 23. But remember, they've been beating the stock up. So in my opinion, we do have this gap down all the way back up here from about $150 and change, excuse me. But you can see we're in like this long-term kind of descending, consolidating wedge channel. And recently the stock looks like it's been trying to pop up and break out, because I feel like, in my opinion, I actually think institutions and intelligent traders and investors alike are potentially seeing what I'm seeing here in the numbers. And they're basically saying, hey, listen, this was a great stock. You know, they beat it up. They brought it all the way down. It came down to new lows of 50. It bounced. It's back in the 60s. We have earnings coming up. They've been looking good. I'm going to start taking and building a position now. And hopefully, you know, inside of the next 6, 12, 24 months, the stock is going to be back up at, you know, 100 plus. And I'm going to see a phenomenal percentage gain. And it's going to be a potential long-term hold. So I'm going to pay half the amount in capital gains tax. And of course, more importantly, it's in a discounted brand name company like PayPal. And again, if we look even here at this number, 27 billion, again, right now, market cap around 69 billion. So if the stock hypothetically, over time, again, it's not going to happen overnight, but let's just say hypothetically, we consistently keep beating earnings from here, we get price target and buy rating upgrades, and the stock slowly goes back up to $150, okay? That would be roughly 150% move from this current level, which would bring the market cap to what, like 150, 160 billion. And if we do, again, supposedly for 2023, they're going to bring in almost 30 billion. If they meet or beat this number, we're going to potentially see anywhere from around 29.5 to a little under 30 billion for the year. And now, if we do our market cap to revenue comparison, even with running to $150 long term, we're still only trading about 6 times annual revenue. So of course that would bring our PE up to like 52 or 54 or something from the current levels here without, you know, any EPS adjustments. But more importantly, again, the revenue to market cap comparison, 6 times revenue could be viewed as slightly high, but also at the same time, we're talking about PayPal, and we're talking about a stock that has been consistently growing and has been consistently coming in above analyst expectations. And I always talk about consistency is key, quarter over quarter, year over year. So if the company is consistently growing its business and consistently coming in above analyst expectations, then it should consistently receive positive catalysts and it should consistently keep climbing over time. Which is why, even though we are, again, at this 150 level, we're talking about roughly 6 times yearly revenue, could be viewed as high, but also at the same time could also make the argument that it's justified in something like PayPal. Now, of course, I just went off on a long-term tangent, and everyone is probably watching the video saying, yeah, listen, that was great. Are they going to beat earnings, yes or no? Again, of course, earnings are 50-50. It is a total risk. I want you to understand the risk going in, and obviously anything can happen. Last time over here, when we looked at PayPal again, the operating margins came in 0.6% lower than what analysts were expecting, and they took this stock from roughly 75 down to new lows here of 50 going into the next quarter earnings. So, of course, nothing is set in stone, nothing is guaranteed, but in my opinion, I think PayPal is severely undervalued, and even with estimates higher here at 7.88 billion, I think even if they come close but happen to miss, I would probably still, in my opinion, be a buyer of PYPL here. But overall, based on how the stock has been trading, again, in this long-term downward consolidating channel, and now it looks like we're slightly trying to get up above these trend lines and break out of this, you know, this could be the catalyst. And if the company comes in and actually does beat these revenue estimates, I think that we're going to chunk back up to mid-70s, and then after that, we may continue to run up to $85, potentially $90 a share. All of this could happen inside of the next couple of weeks. But overall, again, hard to tell, but if, in my opinion, if I was a betting man, I would probably look for PayPal calls. Or in general, if you're not a stock options, investor, if you don't feel comfortable doing options and you stick with shares, PayPal PayPal down here, as I said, even when they were starting to pull it down here into the low 60s and into the 50s, I said the whole time, in my opinion, that it's an overreaction, looks good in the numbers, and I would be a buyer and be accumulating shares here. So even here, back up at 63, 64 and change, I still say again, in my opinion, looking at these numbers, I think the shares are a buy as well. But, you know, of course, I just wanted to do a quick little update here for the earnings play, but even looking at the forecast here, we can see we have one person with a strong sell, price target down here at $50. I have no idea what this guy is looking at. But on the flip side, we have 46 other analysts all saying to either buy or hold PayPal. So, you know, we've looked at a lot of crappy zombie companies that flew to the moon for absolutely no reason and then completely fell back down to earth and fell off a cliff. And a lot of those no-name, undeserving stocks usually have, you know, buy ratings, and the stock's at $1.70, but everyone thinks it's going to $5, $8. So that's what makes me laugh. You know, you have these useless companies, everyone's pumped about them and hyped about them and trying to tell the public that they have higher price targets. Now you have something, in my opinion, that has very, very high conviction here and a lot of proof in the numbers, in my opinion, that they should be trading higher, not lower. Yet you have a strong sell reco at a price target of $50. So, you know, it really just makes me laugh because, you know, I don't want to go down the conspiracy rabbit hole, but, you know, I just laugh sometimes that the better companies get these mixed price targets and these mixed analyses, and the crappy companies, it's like, you know, no one sees anything negative, and it's only going to be bigger and better things, you know. So, you know, I don't want to go down that rabbit hole, but in my opinion, it's all nonsense. And overall, I think PayPal is a buy. Even moving, even moving forward here, you can see a slight dip in the EPS for Q1 of 24, and then right back up and climbing throughout 2024. Same thing on the revenue side. Estimates are up now at $7.88 billion. You see a slight dip back down to about 7.5 for the next quarter moving forward, and then right back up to $7.86 billion, and then north of $8 billion in the second half of 2024. So that's why the company, more than likely, is going to stay on this path of consistent revenue growth, in my opinion. And of course, look over the years, right? We crunched the numbers before. I said what, like 29.6 billion. You can see estimates for the year of 2023 coming in at 29.61 billion. So if the company happens to beat these revenue estimates this quarter, then that would probably translate to a beat for the overall fiscal year of 2023, coming in above expectations. And all they have to do, really, in my opinion, is just maintain future forecasts. They don't have to try to pump themselves up and make it sound more, you know, make it sound like it's going to be better than it is. All they have to do is beat these earnings and, of course, say that they're on path and everything's going to stay the same going into 2024. And in my opinion, they won't beat the stock up. And, of course, moving forward, looking at these numbers, we are still expecting 7, 8, 10% revenue growth year over year moving forward. For 2024, almost 32 billion, 25, 34.7 billion, we'll call it, and 26 up to 36.84 billion. So, again, just over the next couple of years, from this higher point here that we've come from year over year, the company is expecting roughly 25% revenue growth over about the next 3 years, which splitting up would translate to, you know, roughly like 8.5% revenue growth year over year. So I still say, in my opinion, PayPal is a winner. Myself personally, I would be a buyer of PayPal, even going into these earnings, whether they meet, beat, or miss. I would still, personally, in my opinion, be bullish on PayPal. But let's look at stock charts real quick. So we switch over here to stock charts. We can see the stock has basically been staying above the 50-day moving average since about the middle of November, and having multiple bounces off of this moving average. And we can see, of course, we're slightly trying to stay green today with these earnings coming up, potential MACD crossing to the upside. So that's why, again, obviously, if they beat and numbers are great, the stock is going to go up a little bit, chances are. But of course, more importantly, we do have some potential technicals lining up that can help fuel that rally. And our RSI, again, sitting here at roughly 55.7. So we definitely have more upside to that 70 benchmark. So we do have some decent potential here if the company can deliver after hours. And on the weekly, we can see over time, again, look at this tightening, this consolidation taking place here, the tightening of the Bollinger Bands. In my opinion, the stock is basically just gearing up and waiting to break out from this level and start to climb back towards where it was and potentially reclaim not only that gap fill at around 152 or whatever it was, but trying to slowly and steadily get back up to this 200-day moving average here of a touch below $145 a share. Again, that is going to take a while, but as long as the company keeps doing what it's doing, chances are, in my opinion, it will probably come to fruition. And here on the weekly, again, we have an RSI sitting at about 53.5, so we definitely still have more room to the upside. And look at this whole time, the way they've been keeping the RSI down at about 50 and below. So now we're kind of climbing up above that long-term level that the RSI has been kept at here for what? We're talking like 18 months straight or something. So that's why I feel like, in my opinion, if the company could come out and beat earnings today after the close, in my opinion, I have high conviction that they will. That's just me. And if that does take place, I think that we can seriously see a massive percentage pop up in PayPal here today after the close. Looks like the MACD has been slowly climbing for the last couple of months here. That's what I mean, on anticipation, I think, of this earnings play. So I think, I don't want to necessarily say make or break for PayPal, but looking here again, even if we chunk back down, you know, if the company happens to come in slightly light here on any of these metrics, they could potentially beat it up again and bring it back down potentially to the middle of this downward consolidating channel, potentially 56 and change. So you could see, what's that, maybe like a 10 or 12% drop after hours. But again, in my opinion, overall, especially for the long term, I think the company looks good. But of all the companies reporting earnings today after the close, in my opinion, something like PayPal may be worth rolling the dice on. And of course, another piece of advice, one of my sayings that I always say, aim small, miss small. And again, earnings plays are 50-50. They technically are completely a gamble. Anything can happen. So nothing is a sure thing. So if you are strictly looking for a little bit of action today after the close and you want to play the earnings, in my opinion, aim small, miss small. And by taking a cheaper position, you are probably going further out of the money. And if the company actually does report these nice pumped up numbers, then you will see probably an even greater percentage return because you took such a cheap out of the money speculative play. But that's just my opinion. You play it however you want. Let us know down in the comments section if you're going to be getting involved with PayPal and what position you may potentially be looking at on the stock option side as well. But here, looking at the pivot points, again, you can see 83.27. I mean, we're talking about, you know, like a 33% move here from this level. But again, it may not happen instantaneously, but if they come in with good numbers, you're probably going to see that initial pop, and then you're going to see the slow climbing over the next couple of weeks. That was on the weekly. And here on the daily, we have resistance of 67.55. Next resistance level, 73.75. So in my opinion, that is actually maybe around the level that the stock should immediately pop up to if these numbers come in above analyst expectations. So what's that, 1/6? So you're talking what, like 16% potentially of a move we could see after hours? I'm sure if you look at, other investment websites or whatever, they may be expecting a different type of move after hours. But I'm just saying, overall, in general, in my opinion, looking at the stock, climbing up roughly 10 points here, almost in the immediate short term, I think, in my opinion, is extremely feasible. And given some time, we could potentially see 80 plus. Of course, if we miss, back down to the mid 50s, back into this long-term consolidating channel. But you can see how it's been rallying, gearing up since last earnings to come into this earnings. And again, we're kind of potentially near this apex here. And if some really good news and numbers do come out, I think now could potentially be the quarter and the time where we actually finally pop out of this long-term channel and begin trending back upwards. But that's just my opinion. And again, I just want to say, I've been making some good calls on the earnings side, but again, nothing is set in stone. Nothing is guaranteed. Earnings are 50-50. They are completely a gamble. But again, please let us know down in the comments section if you're bullish on PayPal, if you're bearish on PayPal, and if you are potentially taking a position here going into earnings. I'd love to hear from you guys and hear about how you all feel about PayPal holdings. And I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But of course, more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. See you in the next one.